Hello?
You are awarded the Nobel Peace Prize for 2021.
My God, thank you. Oh my God.
The Royal Swedish Academy said the scientists'
Now
discoveries
to the big
demonstrate
announcement
that our
today, the 2021 Nobel Peace Prize winners. They are journalists.
We are now ready to announce the result to you and to the world.
Every year, the Nobel Prize winner is announced for the entire world to celebrate, and it catches many people's eyes. Not only is it a great honor, but also for its large bonus amount. In fact, the Nobel Prize has a history of over 100 years, but the prize money never decreased and became more and more. The Nobel Prize in Economics in 2014 was awarded to Jan Tyro, and the prize amount is 8 million Swedish kronor. Angus Deaton won the Nobel Prize in Economics in 2015, and the committee awarded him 8 million kronor. In 2017, the winner was Richard H. Thaler, and he got 9 million kronor. New thinking, new finance. Welcome to the Legend Finance Academy, the place where future billionaires come to get inspired. The Nobel Prizes are widely regarded as the most prestigious awards given for great intellectual achievement in the world. Several weeks ago, the winners of the Nobel Prizes were announced, and everyone got lots of money. It makes us wonder where the prize money comes from and how money has not run out all the time. When Alfred was young, he was an intellectually curious kid. He was very interested in engineering explosives in particular. After a long time, he invented a new explosive called dynamite. Nobel earned a lot of money through dynamite, but he was deeply distressed by the thought that explosives could be weapons that would kill people. So, he wanted to find a way that would lead to world peace. Then he used his money to award prizes to those who contribute to world peace each year, and the Nobel Prize was born. Nobel made this will before he died. In accordance with his will, Nobel Prizes have been awarded to those who contributed to physics, chemistry, physiology, or medicine, literature, and peace each year. Only once during these years has a memorial prize been added. It is a prize in economics sciences in memory of Alfred Nobel in 1968. So, where does the prize money come from? Just as mentioned above, on 27 November 1895, a year before his death, Alfred Nobel signed a famous will, and Nobel stipulated in his will that most of his estate, more than 31 million Swedish kronor, today approximately 1794 million Swedish kronor, should be converted into a fund and invested in safe securities. According to the original 1901 investment rules, the term safe securities was thought of as gilt-edged bonds or loans supported by such securities or supported by mortgages on real estate. The significance of this investment policy of the foundation is self-evident, and it plays a very important role in foundation preservation, funds augmentation, and prize amount. However, the two world wars brought along with lots of changes in consideration of the economic and financial aftermath. The term safe securities had to be changed in the light of prevailing economic conditions and tendencies. Therefore, in the early 1950s, under the requirements of the Foundation's Board of Directors, the Swedish government sanctioned changes that the board could invest not only in real estate, bonds, and secured loans freely, but also in most types of stocks, which means they can invest with the money from Nobel Foundation freely on the premise of abiding by all practical purposes. When the first award ceremony was held in 1901, every Nobel Prize laureate could get 150,000 Swedish kronor. Then the prize amounts declined steadily, and the cash prize reached a minimum in 1990. But in the intervening years, along with the long fought for tax exemption granted in 1946, the trend of decline was gradually reversed. On average, it even keeps pace with increasing inflation. Fortunately, the real value of the prize amount increased dramatically by the 1990s. Meanwhile, the prize amount reached 10 million Swedish kronor in 2001 and stayed there for many years. According to the organization's annual report, the goal of the endowment fund is to meet minimum annual returns of at least 3.5% above inflation. The fund invests in equities, fixed income, properties, and alternative assets. The breakdown of the portfolio is approximately 55% in equities, 10% in fixed income, 10% in properties, and 25% in alternative assets. In a word, the money for the Nobel Prizes comes from the estate of Alfred Nobel. Since the first prize was distributed in 1901, the prize amounts have fluctuated depending on how well the investments have performed. The investments have been impacted over time due to the global events, social, political, and economic, primarily throughout the 20th century. In many of these years, the prize money increased slightly, but the value of the cash prize in today's currency was roughly the same owing to inflation. And the interest on that money is also used to fund the Nobel Prizes. Now here's the point. Probably few of us need to manage as much money as the Nobel Foundation does. But the way they turn a fixed amount of cash into generations of wealth is something every one of us should learn. When investing, you may often hear the words of "don't put all your eggs in one basket." It tells us that in the capital market, putting all of your money in one particular stock can be risky. This is because the value of the stocks we buy can go up or down at any time. We will be profitable if it goes up. However, if it goes down, our investment will go down with it together. So what can we do to avoid the risk? Well, one effective way is to mitigate the risk is to let our portfolio be diversified. An investment portfolio is a collection of assets which usually includes stocks, bonds, commodities, currencies, and funds. Diversification is a management strategy that spreads our money across a variety of types of investments in different countries and industries to withstand market fluctuations. If one of these investments does not perform well, another may be performing better. In this way, our portfolio is protected and the losses could be offset. For example, before the pandemic, we had our diversified portfolio combining tourism and certain technology stocks. The gains experienced in technology stocks during lockdown could have compensated some of the losses experienced by tourism stocks and other travel-related industries. Moreover, as ordinary people, what can we do to build an investment portfolio? First, choose an account that works toward goals. To build an investment portfolio, choosing an account comes first. Different investment accounts have different functions. For example, some are meant for retirement and offer tax advantage for the money we invest, like individual retirement accounts. Regular taxable brokerage accounts are better for those who want to retire in the near future. Besides, if you need money and you are going to plan it on investing within the next 5 years, it may be better to open a high-yield savings account. Moreover, take into consideration what exactly you are investing for and think twice before you choose an account. Second, choose the best asset allocation. After opening an investment account, we need to choose the best asset allocation for ourselves. How do we decide exactly how much of each asset class we need to invest in? Before that, we need to know more about different ways of investments. Stocks are a type of security that gives stockholders a share of ownership in a company. Investors buy stocks that they believe will go up in value over time. The risk is that the stock might not go up all the time and even lose value at any time. Bonds are loans to companies or governments, and investors get paid back over time with interest. They are considered to be safer investments than stocks, but bonds generally have lower returns. There are a few different kinds of mutual funds we can invest in, and they allow us to add instant diversification to our portfolio. Mutual funds might be risky to some extent, but they are generally less risky than individual stocks. Third, choose our investments based on the risk preference. Asset allocation is highly dependent on our risk preference. An aggressive investor or one with high risk preference is willing to risk losing money to get potentially better results. A conservative investor or one with a low risk preference favors to maintain the original investment. People of different ages may make different choices. For example, when we are 30, we may choose to leave 70% to 80% of our portfolio allocated to stocks and leave 20% to 30% of our portfolio for bond investments. However, in our 60s, the portfolio allocation shifts to 40% to 50% in stocks and 50% to 60% in bonds, or even more. Okay, that's all for today's video. Thanks for watching, hope it's helpful. If you have any ideas, comment down below and we'll keep up with you. Have a good one, and I will see you next time.